In this video, I'm going to talk about a couple of alternatives to long-term care insurance. The first one is life insurance with a long-term care rider. And basically what this does is it provides a mechanism by which a person can sort of piggyback off of their life insurance to receive a payout to pay for long-term care. Now, this may actually reduce the death benefit associated with the life insurance, but it provides an opportunity so that the person doesn't necessarily have to try to sell their life insurance policy. We're not talking about invoking a payout in anticipation of death, right? So we don't really have that. But basically, it can be a situation in which the person, if they have this policy, can basically receive a payout, far before death, and use that to help pay for some of the long-term care costs. And again, it may wind up decreasing the amount of the death benefit when the person ultimately dies, but it is sort of an option that can provide a way to fund some of the long-term care. There are also annuity contracts with long-term care provisions. So for an annuity contract, basically what happens is a person pays a certain amount of money up front and then receives a stream of income later. Now, with that, there can in some cases be sort of a long-term care provision tacked onto that. And what kind of happens is basically if the person has purchased this annuity contract with a long-term care provision and they wind up going into a long-term care kind of facility and receiving long-term care, then the long-term care costs are first paid out of basically the cash value of the annuity contract. And then when the cash value is exhausted, then the extra coverage that was tacked on with the long-term care provision basically kicks in and pays out up to a specified amount. And the advantage for this is because it's really sort of more of an annuity, and it's not quite the same thing as a standard long-term care, and it's partially linked to the cash value that you put into it. Typically, they're going to have less rigorous underwriting for this. So if a person wouldn't necessarily qualify for certain other types of policies, they might qualify for this. The downside here is the person's going to have to pay quite a fair amount of money right up front. So this is not a great option if you don't have a big lump sum of cash. But if you do have a lump sum of cash, it's something that you could conceivably purchase. There are also longevity annuities, and this is basically an annuity that begins at a later age. So basically, again, this is a situation in which a person pays up front and then receives an income for the duration of their life. And so that sort of provides a cash flow that could help to pay for long-term care as well. Another interesting option is a reverse mortgage. And this would be one in which basically a person in effect sort of sells their house to somebody else in installments. And so the person or the entity is basically paying for the house in installments, basically. And then they use that cash flow to then pay for long-term care. For a number of these kinds of options, some of the annuities, reverse mortgages, things like that, they're interesting options, but you have to be very careful about what kinds of fees are involved and expenses and so forth for the different policies and so on. And so that's something to be very careful about. A reverse mortgage sounds great, but you got to read the fine print because technically you're sort of selling your house but living in it. So that's kind of raises some questions of how are things going to play out as it relates to maintenance? What are maintenance obligations? And also are you getting an appropriate price for it? You might be just better off just flat out selling the house and using the proceeds to pay for rent, for instance, or for the cost of the long-term care facility. So there are some things to consider there, but there are things like reverse mortgages and annuities are options that can feasibly be some degree of an alternative to long-term care insurance. Okay, hopefully this little miniature description has been helpful. Thank you for watching and have a great day.